Are you interested in advanced tax savings? Now, I'm not talking about the usual loopholes that everyone's going over. The basic stuff, the IRAs, the retirement accounts that you could use, a little bit more advanced stuff, hiring your kids or renting your house back, or being in real estate as an intermediary step. We're gonna get into some advanced tax savings specifically for higher net worth business owners. I'm Casey Chauhan, founder of togethercfo. Do you want to save more money on taxes? If so, stick around. That is what we're covering in this video. Advanced tax savings for business owners that make multiple seven figures. And that's not in revenue, that's net profit. So if you're making $1 million plus in net profit, stick around. We're going to show you how to save between 30 and 40% every single year on your taxes. Let's go. In this video, we're gonna break down a scenario of what it looks like to create these tax savings, how they work, how much they can be, and more importantly, is it a good solution for you? So let's start with the numbers first. We'll make sense of them, we'll show you how that works, and then we'll back into how to do it later on. So right at the top, let's assume in this hypothetical scenario that your net profit is in the region of $3 million, right? And if you are in California or any other big state, you're probably gonna be paying a lot of tax on that. So in the example, let's go $3 million. We'll have a 40% tax rate, and that would then mean you have a $1.2 million tax liability. Gotta be painful for anybody, right? There's many different ways to reduce that down, but in this hypothetical, we're assuming you've already tried them or you already are doing them. If you want the top 50 tax loopholes, hit the link below. We'll put you into our free school community. You can download that and see what you're using and what you're not. This isn't about that. This is the advanced stuff. So 1.2 million in current tax liability. Let's see how much we can save you. If you were to deduct, let's say 30% of that and donate that to a foundation, you could take your tax down from 1.2 million down to 840,000. So how does that work? Let's break it down. So right now, on the $3 million at 40%, you're paying 1.2 million in tax. But if you did a donation of $900,000, that 3 million goes down to 2.1 million, right? 2.1 plus 900,000 equals 3 million. So now your taxable income goes from 3 million down to 2.1 million. At, let's just assume the same 40%, then your new tax would be $840,000. Great. That has now reduced from 1.2 over here to 840 over here. That's a fantastic saving. That's just saved you $360,000 by issuing a 30% donation. Great. It gets better though. Stick around. The beauty is, the 360 plus the 900 that you donated in, you still have control of both. You've saved the money with a hard cost saving on this side by reducing your taxable income. But the bonus is, on the other side, in the foundation, you completely control the foundation. So what does that mean? That means there's $900,000 sat in a foundation that is tax exempt. So that means it can grow without any capital gains tax, and instead it pays a net investment income tax of 1.4%. Now you show me anywhere you can get a 1.4% tax rate, and that would be much, much better than what I'm assuming that you are at right now. So in this scenario, if you did the advanced structure, you've donated 30%, which is the 900K. You've saved the 360,000 in hard cash. That puts you at a $1.2 million tax saving, or wealth creation if we add the two together, just by creating a foundation. Now, the power of this foundation is so much more than just for tax savings. You can actually do good with it in your community, give back to other charities and organizations that are close and dear to your heart. You can grow that capital, 900K year one, completely tax-free, other than the 1.4%. You can get your children involved. This is a great legacy tool because now you can bring the family into the foundation and you can share and teach and learn them your mindset and employ them along the way. So this is a great tool to create a lasting family legacy, protect assets, because now those assets are no longer in your name, they are in the name of the foundation, and they grow tax exempt. The tax exempt world is completely different in a 501c3 compared to the regular world with the LLCs, S Corps and C Corps. Over there, you're looking for tax deductions and trying to write off as much as you can. When you move over here, you're in a tax exempt world. It's completely different. You're not no longer scrapping around for deductions. Can I take this meal? Was this travel a business trip? All of these gray areas that no one has cleared up for anyone. The IRS could give us a really simple list of you're allowed this, you're not allowed that. Instead, it's intentionally kept grey, and that keeps you on the hook and gets you in more trouble. In the tax exempt world, you're not running around looking for loopholes. You're now clearly in an exempt world where you get control of the assets, but no ownership, because taxation follows ownership, right? So in this scenario, we can use it in a million different ways. But remember, that's just one of many ways that you can use advanced tax structures to save money on taxes. Now, if you found this interesting or you want to learn more, hit the link below and set up a call with our team. We're more than happy to help show you the benefits of creating advanced structures to save money on taxes, protect your assets, totally avoid capital gains tax, and create that lasting legacy in your community. I'm Casey Chauhan, founder of Together CFO.